So, illustration 6. Jayasili is a sole proprietor. Sole proprietor means single owner having a provision store. Following are the transactions during the month of January 2018. Journalize them. Okay, which means she is holding a provisions store and there are 10 transactions given for us for her business, from her business. Okay, now you have your month, you have your year also here. Okay, and these are the date. Okay, dates are relating to the transactions. And as we all know, we have already seen 13 examples on how to analyze the transactions and convert the transactions into a journal entry, right? So now from now on we'll be having all these type of transactions wherein we'll be directly writing the journal entries alone. Okay, so maybe in the beginning you will find little difficult to convert these transactions into journal. Once you get the practice of analyzing the transactions, it will become very easy for you to convert it into the journal entries. Now so here the year and month is given, that is January 2018. First date is commenced business with cash rupees 80,000. I hope you all remember I said always in any transaction there will be two accounts involved. Okay, so here in this particular transaction we have commenced business. So as I said earlier, commenced business means we have started the business, so it is to be treated as capital. Okay, so this is one account. The other account which gets affected or involved is cash account. Now we have to apply the first we have to check what the nature of capital account is and cash account. Okay, nature means personal, real or nominal account. Capital is always personal account. Okay, so this is personal account. Cash is always a real account. Since it is a property or belonging to the business, this is a real account. Okay, now when we say personal account, we have golden rule, right? That is, for personal account, debit the receiver, credit the giver. Here capital, okay, who is bringing in capital? This Jayasili, this person is bringing in capital. So Jayasili's capital account should be credited because Jayasili is the giver. Okay, so we have to credit the giver as per personal account rule. Okay, then comes in cash account. Cash is a real account, as we say. As per real account, the rule is debit what comes in, credit what goes out. Here cash is coming into the business. Okay, because Jayasili is bringing in cash to the business, right? So cash is coming in to the business, so we have to debit this cash account. Okay, this is just to analyze. Okay, you need not write these and all in your classwork, just we will have to write like this. Okay, first write the format in the books of Jayasili. Journal entries: date, particulars, ledger folio, debit rupees, credit rupees. You have the year as 2018. So always you need to write your year and month only once. Okay, you need not write this again and again for all the transactions. So previously while writing the examples in the date column, you were writing example 1, example 2 like that. But now you will be writing the exact date of all the transactions. So first place alone you will write your year and month, that is 2018 January 1. Cash, as we analyzed, we saw that cash should be debited, capital should be credited. Now you have to write the entry like this: cash account debtor. You all remember, right? You have to write in the particulars column. From the beginning itself you have to write cash account debtor should be in the end of the particulars column, and leave off some space. Write to Jayasili's capital account. Jayasili commenced business with cash. Rupees 80,000 is given, so you will write 80,000 here. Fine. The next transaction is dated to deposited cash with bank. So what are the two accounts involved here? One is the cash account, the other one is the bank account. So while reading the transaction itself, we will come to analyze, okay, we will come to know what are the accounts involved. Okay, sometimes only there will be certain accounts hidden in the transaction. Here it is directly given, but here it was hidden, right? So we found it as capital because since it is started or commenced business, it is always capital. So it is hidden account. But now in this transaction we could see cash and bank directly. So now deposited cash with bank. Here as we say, cash is a real account, bank is a personal account. As per real account, the rule is debit what comes in, credit what goes out. When we deposit cash into the bank, it means cash is going out of the business, so we need to credit this amount. Okay, and with bank, so bank as per personal account rule, debit the receiver, credit the giver, right? So now bank is receiving the amount because deposited cash into bank means Jayasili has taken cash from the business, so cash is going out. She is going to deposit into the bank, so bank is the receiver. So here receiver should be debited. So your journal entry will be bank account debtor to cash account. Okay, so here date to bank account debtor to cash account, deposited cash into bank. For writing this narration, you need not worry. You can just write what is there in the transaction itself. So you are writing deposited cash into bank. The amount is given is 40,000. Okay. The third one is purchase goods by paying cash. Again here also, since it is given as goods, okay, whenever we have goods in the transactions, we don't consider goods, we have to take up the purchase account. So here purchase account is one and the other one is cash account. Purchase is a nominal account in nature, cash is a real account in nature. The nature of account will not vary for the transactions, it will always be the same. Okay, so as per nominal accounts, debit all expenses and losses, credit all incomes and gains. Okay, purchase, when you purchase something, you will be spending the amount, right? You are paying out of your cash, right, or out of your savings. So in that case this is an expense. So expense means as per nominal we have to debit the purchase account, and this is the cash account, which is we saw as real account in nature. Real account rule is debit what comes in, credit what goes out, right? So when you are purchasing you're purchasing goods. Okay, Jayasili is purchasing goods and she is paying cash also, so cash is going out of the business, so automatically this is to be credited. So you'll write purchases account debtor to cash account rupees 5,000. So date is 3, you have to write in the date column purchases account debtor to cash account rupees 5,000. Fourth, dated purchase goods from Lipton and Co on credit rupees 10,000. Okay, here also we have purchased goods, so we will be taking purchase as one account. The other account will be, you don't have any other thing except Lipton and Co, which is the from where we have purchased the goods. Okay, and since it is given as on credit, we automatically have to take up from whom we bought the goods. Okay, So in that case we will take up Lipton and Co as the another account. So as we know, purchase is a nominal account. It is an expense to the business, so we have to debit the account. And Lipton and Co is personal account in nature. So as per personal account, debit the receiver, credit the giver. When we are purchasing goods from Lipton and Co, automatically he becomes the giver. The company becomes the giver. So this should be credited. Always purchase will be in the debit side only. Okay. So now dated for purchases account data to Lipton and Co, rupees 10,000 should be written in debit and credit column. Fifth transaction is sold goods to Joy and received cash. Okay, so in the previous illustration in the previous transaction we said purchase goods from Lipton and Co on credit was given, so we took Lipton and Co, right? The same thing applies here, but one difference is sold goods to Joy and received cash is given, which means we are not purchasing it on credit, we have paid the amount. Okay, or sorry, the customer has paid the amount, we received the amount. So here sold goods, right? So we have to take up sales as one account. Since we have received the cash, we are taking up cash here. When we have cash in the transaction, even though name is given, this will not be taken, we have to take up cash only. Okay, now this sales account is a nominal account in nature. When we make sale means we are selling goods, right? So automatically we receive the amount, it is a income to the business. When it is income as per nominal rule, we have to credit the sales account. So as we are debiting the purchase account always, we have to credit the sales account always. Okay, so credit. And cash, we are receiving cash since we are making sale. When we make sale, we receive cash, right? When goods are being sold, we receive cash. So when we receive cash, cash is coming in because this is real account. So cash is coming in, so we have to debit this account. So cash account data to sales account should be written. That is dated 5. Cash account data to sales account, you will write 11,000 here. Okay. Then paid salaries by cash. Okay. Here you will take up salaries at one account and cash as the second one. And again, when we take up these kind of salaries or wages, electricity charge, whatever is given, we have to first check whether we have paid or received. Now we have paid. Okay, salary is a nominal account. When we are paying, it means it is an expense to the business. Whenever there is an expense, we have to debit, because expenses and losses should be debited, incomes and gains should be credited. So this, since this is nominal account and an expense, because we are paying, okay, so it is an expense, so we have to debit this. When we are paying salary by cash, cash is a real account. As per real account, debit what comes in, credit what goes out. Here when you are paying salary, your cash goes out, so automatically this account should be credited. Now you will write salaries account data to cash account as the journal entry and rupees 5,000 in debit and credit column. Then comes in paid Lipton and Co, dated 7, paid Lipton and Co by check for the purchases made on 4th January. There is no amount given here, right? In that case, we would have already purchased a good from Lipton and Co in the previous days. So we have to check where that transaction is. Since it is mentioned here, we have no problem. If this is not mentioned, we have to check it. Okay. So Lipton and Co, we have already purchased goods from Lipton and Co for rupees 10,000. On credit we purchased, right? Now we are going to pay that amount, right? Okay. In that case, paid Lipton and Co. So Lipton and Co is one account. How are we paying? We are paying by check. Okay. Whenever we pay by check, we need to consider this as bank account. Okay, check, NEFT, RTGS, online, net banking, debit card, credit card, ECS, all these, then CDM, cash deposit machine, okay, all these terms will always go to bank account, okay, that will be, all these terms will be considered as bank account only. Now we are paying to Lipton and Co. As we all know, Lipton and Co is personal account, debit the receiver, credit the giver. Paid Lipton and Co means he is receiving the amount now, so he becomes the receiver, so we have to debit Lipton and Co. By check, how are we paying? We are paying by check. So here bank is a personal account, bank is the giver, because this Lipton, yeah, this Lipton and Co we are giving him, right, and he actually, we paid by check, so through bank only he is going to get the amount, so bank becomes the giver. So here it is to be credited and the amount is to be rupees 10,000. So you will write Lipton and Co debtor to bank account, payment made by check, or you can simply write how your transaction is, okay, rupees 10,000 here. Then comes in the next transaction 8, bought furniture by cash, okay, you are purchasing but an asset is name is being specified. Previously also we saw purchase transaction, but there it was purchase goods, so we have to take a purchase account. But now since it is bought furniture, what is being bought, purchased is specified, that asset is being specified, so we need to take furniture as the account and cash as the another account. Both furniture and also cash is a real account. Just simply we have to follow whether what comes in should be debited and what goes out should be credited for both the account. Now when we are purchasing furniture, furniture will come into the business, so it is coming in, so this is to be debited, and when we are purchasing, cash goes out of the business because we are paying, right, so by cash, so it is to be credited. So you will write furniture account data to cash. So whenever bought goods, purchased goods are given, in that case alone you will take a purchase account, okay. When any asset is being specified like this furniture, building, okay, in that case you will write it as furniture account debtor to cash account. Always follow the writing the date also, okay. Furniture bought for cash rupees 4,000. And comes in the ninth one, paid electricity charges by cash. So now electricity charges, so we saw, right, already paid salaries by cash, the same treatment has to be done for paid electricity charges also, and you have to see whether it is being paid or received. It is paid by cash is given, so cash has to be taken as the another account. Electricity charges is a nominal account, cash is a real account. As per nominal account, expenses and losses are to be debited, incomes and gains are to be credited. Now we are paying, which means this is an expense to us, so automatically we should debit this amount. When we are paying, cash is going out of the business, so automatically this is to be credited as per the real account rule. So you will write electricity charges account debtor to cash account. The amount is to be written as rupees 10,000. Then dated 10, bank paid insurance premium on furniture as per standing instruction. So all these you forget, okay. We don't need these informations now. Bank has paid insurance premium. So who is paying? Bank is paying. What is it paying? Insurance premium. Only these two are the accounts involved. So now bank is a personal account, insurance premium is a nominal account. Since we are paying insurance premium, this is an expense to the business, so we debit insurance premium. Through how are we paying? Through bank we are paying, so bank is the giver, right? So as per personal account, credit the giver. So you will write insurance premium account data to bank account. So this is how it has to be written. Dated 10, insurance premium account data to bank account, insurance premium paid rupees 300.